Good morning, traders and investors. Roger Scott here, senior strategist for The Trading Pub. It's Tuesday. It's December 5th. I got to change my clock. It's still on the 4th. I haven't tuned it yet. It's 7:51. Market's not going to open up for another hour and 39 minutes. As you can see here, the Nasdaq's down about 100 points. A little more than significant. This is definitely not random. The Dow's not really down too much, about 110. I hate to say I told you so, but I did say to you that the Nasdaq stocks were going to start taking a little bit of a dump. Now, am I thinking we're going to break lows and have a panic crash or anything? No, absolutely not. No. What I simply think is this. I think that it's time for us to have a little bit of a correction, and more likely than not, we will come down to this level right here and maybe start filling this gap a little bit and then start coming up. I still think the market sentiment is rather bullish right now. So I don't think this is going to be a major sell-off. I don't think we're going to go below the 50-day moving average. But it would be kind of nice to get a little bit of a bounce to the downside because the markets have been so inflated to the upside lately. We haven't been able to trade to the short side, and trading to the short side is a lot of fun. So you could see right here that if we do fill the gap, we'll probably just end up filling the gap or come down to the gap and start rallying. Again, volume was reasonable. It's starting to come back. I'm not seeing anything crazy in the price sell-off. Not looking for a meltdown, but I am looking for some corrective pressure. And I warned you it was going to happen, that the market was just too high here and that we need to sell off, especially on the tech stocks. Let me just make this graph a little bigger. It's a little small here. There we go. That's it. Makes it a little easier to see. So you can see here we're still inside of yesterday's range. It'll be interesting to see if we bottom down here and then come up. Yesterday we gapped down, but we closed near the higher end of the range. Remember, we're still in a bullish phase of a market, and typically when we open down, we drift higher, not lower. When we open higher, we drift lower. And if you look at the SPY here, which also has to take some of this pressure, we're still very choppy. So there's a good chance we can open right here below the 8-day EMA and then just start coming back up and create a choppy market environment. This is why I'm more focused on the SPY versus the Dow, versus the QQQ. And if you look at the Dow, you will see that actually the Dow is outperforming all of them. Look at that, nice and strong. So if you see the Dow like this, it's very uncommon for one part of the market to crash and the other one to be really solid. Usually when you see something like that, the other one just becomes very choppy. That's one of the reasons why we sold puts yesterday on Meta and the option income on the cash flow program yesterday. I may actually, if we get a little bit of a bounce, I may actually turn it into an iron condor because I think we're going to be rather choppy for a while, but that's not here nor there. Also, small caps. Small caps are breaking out. Everybody's asking me, Roger, is this it? Is this finally the rally? I don't think so. And let me show you why. And I showed you this a long time ago, and I'm going to show you this again. Believe it or not, and folks in my room can testify to this. They literally can. This is recorded. You can actually look at these dates. I drew these lines back about a year and a half ago, and they still haven't been broken. And if you notice here, you'll notice that we're getting to the upper part of this range, but we haven't broken out yet. Now, this is Kathy Woods. I call these the degenerate stocks. These are all the high flyers that crash during a market crash and then start coming back up. Let me show you something. See why I drew this line here? Because it looks like they're basing here, and it looks like they've been basing for a while. And the question is, are they going to start rallying? Well, they've been rallying really good, but they haven't taken out this high end. Until they take out this high end, really take out this high end, maybe even go up to the 200-day, I'm not going to get bullish on the small caps. And the small caps are going to be the first ones to rally when this market really takes off. So again, bond market, this is the 2-year bond futures. You could see they're not coming up as high. They've bounced up. This is the reaction from the Fed when the Fed said, hey, we may not be raising rates anymore. And everybody and their mother interpreted as a sentiment that they're going to start lowering rates in March, which I don't think is the key. So if this cools off, if this starts breaking lower, a little lower, it's not high, all that up much. This is the 2-year. It's very sensitive to what the Fed does and comes back to the 200-day, which I think it will. I'm pretty sure it will, actually. Look at the longer-term trend on this. See that? We're still in a down phase, and I think this is going to come down. But that's what I believe, and that's going to put pressure. So the fact that the ARK fund isn't breaking out and the fact that the 2-year is let me just go to, and the fact that the 2-year is stalling here is telling me that the bullish phase of this market is behind us. But the fact that the Dow is so strong is telling me we're basically seeing a rotation out of tech and into blue chips and not really a huge meltdown. So let's not get ahead of ourselves. Today, we've got NEO, AZO, MDB, Asan reporting. Again, you can see here the implied volatility. This is the expected move either up or down or both in the stock. So if you think one of these stocks is going to do more, you want to do calls. If you want to buy. If you think that Asan is going to go up or down only 8%, for example, then you may want to sell options against it. Just giving you some idea. Nothing really big today. The big earnings are behind us, but it'll be interesting to see GME tomorrow, Campbell Soup, Chewy. These are important stocks. We got Dollar General, AVGO, Lulu, and Docu on Thursday. So there's a lot of things to pay attention to right now. In terms of Fed data, believe it or not, folks, this report, ISM, this is the activity of the Institute of Supply Management survey, Institute of Supply Management. And remember, services are 75% of our GDP. So if you don't think that the Fed is going to be looking at this, you're sadly mistaken. That's coming out at 10 today, not at 8:30. So be prepared. There's a report coming out at 8. Here you could see the expectation. And it'll be very good to see if activity picks up in the service as opposed to subdues. So as long as the number's above 52.4, we're in good shape. Then that's the ISM. You've got the PMI at 940. That's the producers, service purchasers managers index, the producers managers index, purchasers managers index. And again, it's a service index. And what is GDP services? 75%. You can't ignore this stuff. So we want to see this number higher. Notice the consensus is just flat. We'll see what it brings. And then we have the JOLTS report. So we've got 3 reports right around the time I start putting out trades. So we got to be careful and definitely wait till 10 a.m. today. Tomorrow you've got ADP, which could or could not be big depending on how accurate it is compared to Friday's number. It's a loose cannon. You've also got productivity and cost. That's an inflationary number. And international trades and goods and services. So there is some good reports this week that could drive the market higher or lower. Now, as far as global economy and why is the market so weak today? What's going on with the market? Well, the Nasdaq is down. The tech is down. There's a rotation into blue chips. If you don't know about that yet, then you haven't been watching my videos. And by the way, if you want to subscribe to these videos, go to YouTube, go to Roger-Scott, and you'll find my VIP link below this video. In my video, any video on YouTube, you'll find my link to my VIP room, which is at noon today, free so far. I am going to be closing it down sooner than later, probably before the end of the year, for public clients. It'll be a private service once again, and then you can also get a link to my morning videos. So please. And lastly, you can get a link to my Telegram channel where I give you all the lowdowns of everything that happens during the day. Don't miss out on that. If you don't know where to find it, rogerscott.com/Telegram, or go below the link in the video. Now, China sovereign bonds. Moody's, they downgraded China's debt, or upgraded their debt burden, if you will. Basically, China's not doing well and it's impacting economy. Moody's Investment Services cut its outlook for China's sovereign bond from stable to negative, highlighting growing global concerns regarding the level of debt in the world's second largest economy. That's huge. Alaska Airlines did not do well right after I recommended airlines, right? Murphy's Law never fails. Triple M did well. A lot of folks talked about that stock yesterday, me mostly. Economic data showed that U.S. factory orders fell. That's bad. That's bad, folks. That's not something to be happy about. That's not a reason for the Dow to go higher, okay? Again, 54% chance that the Fed is going to start lowering rates at the Fed meeting. I think this is a huge mirage, and I think this is going to fall, and I think this is going to come and bite us in the butt. AutoZone, Mongo, Tall Brothers, they all have earnings today. Job openings report comes out today. Remember, that report comes out at 10 a.m. Keep an eye on it. Don't go trading in the morning. There's going to be a lot of stuff happening afterwards. Europe is giving us a little bit of tailwind, which is good. Energy stocks gained ground on Tuesday. They sure as heck didn't gain ground here yesterday. China closed sharply lower as risk sentiment took a hit following Moody's downgrade. Real estate, semiconductors, computer stocks led the decline. This may be a precursor to what we see today, although I don't think we're going to see anything crazy. Japan closed sharply lower. We're not getting any tailwind from Japan or China, a little bit from Europe, posting its most substantial decline in almost 6 weeks, attributed to heavy sell-off in chip stocks driven by elevated U.S. futures Treasury, U.S. Treasury yields. Treasury yields actually haven't been really coming down, so I think they're jumping a little bit ahead of things. And by the way, the stock that we have in the active trading room used to be called day trading room. It's active trading, not really day trading. It's a little bit of both. LTHM, it's been downgraded. Mazel tov. We get a little bit of a break. As far as sectors, nothing really new. Much more of what I've been talking about. Look at the last few days. Retail, real estate, services. Retail, that's services. Russell 2000, home builders, real estate and home builders, mid caps, industrial, Dow Jones, financial, basic materials, healthcare, and consumer staples. This is as blue chip can get. Look, tech, energy, that's very, very growth. Utilities, which means, this is a little odd because if Dow stocks are going up, you would think utilities are going up. Very squirrely. But anyhow, consumer staples, still very mixed up, but clearly a bias going into blue chip stocks. So you could see here, blue chips are very strong, tech is weak. Let me give you guys a couple of trades. Let's start off with 24-week highs. Let's see what stocks Uncle Roger really likes right now. Let's see. This S Sentinel 1 looks fantastic. CLF looks really good. Nike. Ooh, I like Nike, and retail has been hot. I'd go with Nike. I like Nike around here, folks. Nike. That would be my number one choice. And it's a blue chip stock. It sure as hell isn't a tech stock. Now, let's go to the lows. And consumer stocks aren't doing that bad. Okay, now, what stocks are in the crapper? Let's see here. Here's a good one. TKO, World Wrestling Entertainment. PLL right here. Lithium. PLL and TKO. And let's see here. And probably Baba, if I had to guess. It's also a tech stock, Chinese stock. They're not doing good. Baba, Yum, PLL, and TKO. If I was a betting man, I'd probably go with Baba and Yum because they're really, really hanging down there. And Chesapeake Energy doesn't look so great either. It's coming down of a compression. I would put a protective stop right around here. There may be more downside. Now, before I let you go, wow. We talked about a lot. We covered a lot of ground. I aim to bring at least 100 people to join me on a mission to accelerate my weekly cash flow challenge. The mission is to make you, yes, you, Clyde, no, not you, Clyde, you, my next long line of 5-figure success stories. And we'll do it by targeting extra cash flow from the market each and every day. I'll be live at 1 p.m. Eastern today to cover all the details. So click on the link below and I'll see you this afternoon. Have a great day. Bye, everyone. Have a great day. Join me in my VIP room at noon today and join my Telegram channel. If you're not, you're really missing out big.